Lesson 4. Student Loan. A student loan is a money borrowed to help pay for education with the assumption that you would repay it later. Student loans aren't all that different from other sorts of borrowing. The procedure of acquiring and repaying a student loan, on the other hand, has certain distinguishing features. How do student loans work? Because your student loan may be the first loan you've ever applied for or received, bear in mind that it's not just how much you borrow that matters. It's how much that amount costs in the long run. Student loan interest rates. The interest rate on a loan is one of the most crucial components that directly influence the long-term cost. The cost of borrowing money is simply expressed as an interest rate. It is computed as a percentage of the loan amount and is applied to your loan. A fixed interest rate does not vary during the life of the loan, but a variable interest rate can. Interest rates on federal student loans, which are supplied by the government, are currently fixed and set once a year. Private student loans given by banks, credit unions, private lenders, and other forms of financial organizations often have higher interest rates than government direct student loans, which might be fixed or variable. Interest rates will vary based on the lender, so keep this in mind when you look around for private student loans. Student organization fees. You should also be wary of loan origination costs, which are one-time charges assessed when you take out the loan. The percentage will differ depending on the kind of student loan and the lender. The origination charge for federal student loans ranges from 1.057% to 4.228% of the loan amount. Many private student loans have no origination costs, but this isn't a hard and fast rule. When the origination fee is levied, it's normally added to the loan amount, so you pay the cost as part of the loan. Student loan repayment term. The term of your student loan repayment is the period of time it will take you to repay the loan. It varies substantially depending on the sort of student loan you obtain. Repayment lengths typically range from 5 to 15 years. Before you take out a student loan, be sure you understand the terms of your loan. Types of student loans. Direct subsidized and direct unsubsidized loans are two types of federal loans. 1. Federal loan options. Direct subsidized and direct unsubsidized loans are two types of federal loans. Direct subsidized loans are available to undergraduate students whose families can show financial need. These are the only federal student loans that do not collect interest while the student is enrolled at least half-time or during the grace period following graduation, which is normally 6 months. Direct unsubsidized. Loans are accessible to most undergraduate and graduate students and are not based on financial need. Interest will begin to accumulate at the time of loan distribution. 2. Private student loan options. The terms of private student loans vary based on the lender. Private student loans, as opposed to government student loans, often require applicants to undergo a credit and income screening to ensure they will be able to repay the loan. Because most students do not yet have enough credit history or a consistent income to qualify on their own, private student loans are frequently co-signed by someone who meets the qualifications and accepts equal responsibility for repayments, such as a parent or a guardian. The loan will be reported to credit bureaus for both the student and the co-signer.